Welcome back to Good Revenue. We're here today with Greg Stein. He is the head of M&A and Strategy at Xerox, and he's joining us to discuss what it takes to refocus a major public company, which is a huge undertaking. Welcome, Greg. We are so excited to have you.
Yeah, thanks for having me here. I'm really excited.
Appreciate you being willing to talk about some really interesting restructuring work that you're doing at Xerox. So we'll jump right in. What does it take to refocus a huge public company? We'll just start with an easy question right from the top.
It takes a village. I think that's definitely probably the quote, but let me give you some background just for also
Sure,
listeners who may
that'd
not
be
be
great.
aware of what we're doing. End of last year, beginning of this year, we announced this project called Reinvention. Most people know what Xerox does. We are an office-focused print company, or at least that is where the majority of our business is located. We've gone through a challenging time the last couple of years. We were hit by COVID. The move to a hybrid work environment meant less printing, which had impacts to our business. Subsequent to that, in 2021, 2022, there were supply chain disruption, which led to escalated input, logistics costs, delayed shipments. All of this impacted profitability. So, in light of this, early last year, we did a top to bottom review of the company and really came away with three main things. The first one is we need to simplify our operating model. Xerox is an old company. It's been around for a long time. As you probably imagine, we have many systems and processes. It needs to be easier to do business with us, both with Xerox and within Xerox. We have hundreds of legal entities, dozens of ERP, payroll, invoicing systems, thousands of applications. We have too many standard non-operating practices, non-integrated go-to-market, duplicative warehousing, basically things just being too manual. And there was really a recognition that addressing these matters at scale could lead to better customer outcomes, employee outcomes, and lead to a healthier company with improved cash flow. The second is we reviewed our geographic and offering presence. So we decided to move to a partner-led distribution model in many geos. And then for offerings, we just announced the reduction of SKUs within our production space. We believe the more focused offering is the way to go. And certainly there is a lot of reading you can do on companies that have done that and both ultimately been quite successful. Probably the last area is repositioning the company for growth. So focusing on what are our natural adjacencies, areas where we have the right to win. And that's really a big theme. Where do we have the right to win? And through this, we segmented by size of customer base, areas of large and growing TAMs. So we talk about digital and IT services, break fix services, field services, delivery, and then just figuring out ways to expand wallet share in existing accounts. So to sum up what reinvention is, and really to maybe start tying back in your question, it's a comprehensive and operational simplification of our business. It's a structural redesign of our operations combined with select investments to really meet client workplace needs and to drive client and partner success. So we re-announced a reorg. We shifted from a geographic go-to-market to a business go-to-market. We announced establishment of a global business services organization to drive enterprise-wide efficiency. And even with the complexity and the challenges, and there are plenty of those, the buy-in in the organization has just been incredible. It really has been. We have a management team focused on success. We just appointed a new board. I haven't met any of them, but I hear great things. I'm excited to work with them. And all of this really will allow us to build capabilities on top of being that market leader in print. And hopefully it allows Xerox to be around. We talk about the next 100 years, but obviously we will have to evolve to be around the next 100 years. So to refocus a large company, I think it takes vision, especially at a time right now where we're purposely shrinking. So you need the leadership and you need to get people to join you and convince them of that vision.
I think this is super helpful. And it's such a great setup. To your point, Xerox is a legendary company. Everyone knows this brand. And it's not the first time that the brand has gone through transition. So, what might you say is different about Project Reinvention versus other evolutions in the business?
One thing I've really seen is a refocusing. What do we think we can be good at? Where can we win? That's really what drives us. And then it's about customer success. Where can we help the customer? We talk about workplace technology company. What are those solutions that could drive customer success? There's definitely comparative to some of the transactions we've done in the past, and I'm going back decades. We are definitely focused on certain verticals, digital services, IT services, so forth. So I think we actually have an idea of where we want to go. It's now that strategy piece, actually, how do we get there?
So I'm curious, did Xerox consider going private to do this work? What was the thought process like when you were evaluating this? I recognize some of this is still in process, so to the extent you want to share with us only.
Yeah, it's a good question. Yes, it's certainly easier to do a transformation in private than in the public eye. The latest quarter is an example. We announced a reorg, we started the process, and it did lead to short-term disruption. Certainly easier not having to worry about quarterly earnings and hitting consensus. But at the end of the day, it is all noise. We put out aggressive 3-year operating targets. And we believe if we can execute, we can hit these targets. And really, that's what we're focused on. And
What does the end state look like? What is Xerox trying to be for the 200,000 plus customers that you have, which is obviously massive customer base?
I'm privileged to be at a company to have that brand recognition and that broad international customer base as well. We want to address the productivity challenges of our customers. We recognize the future is associated with a hybrid workplace, distributed workforce. We can't just be a print solution. Our slogan is, and this is a new marketing campaign we did last year, but it's we make work, and that really defines us. We want to be the go-to for all of our customers' office needs, and we understand this is going to have to be through digital transformation. So it's about allowing for a better client experience. It's about greater customer success. It's about moving beyond the office manager up to the CTO or the CIO or the C and doing that. And then thinking about how we're going to do it. So mentioned IT services. We do that today, but can we do it at greater scale? Can we move about beyond being a value-added reseller and more of a managed services security provider? Digital service is another area, and we segment that into 2 buckets: customer engagement services and capture and content. Customer engagement services historically has been being print shops for our customers. They want to do a marketing campaign, we print on their behalf, send it out. But now it's really much more broad. It's about multi-channel marketing and communications. And we did an acquisition 2 years ago in the UK that expanded those capabilities. We continue to look how we can not only do that in the UK, but do that worldwide and really have a strong across the board digital capability. For capture and content services, that's more about the inbound. And historically, that's really about taking physical documents, scanning them, putting them digitally. We have to move beyond that. It's AI. It's the keyword of the day, generative AI, which every company says, even if they have absolutely no plan. Intelligent document process, workflow automation, content management. These are all areas that we feel we have the right to play in, and we have some of those capabilities, and we have to continue to invest and make sure those capabilities are in sync with our customers. Interesting thing about Xerox, you think of it as an OEM, but we're really not a manufacturing heavy company anymore. Only about 1% of our revenue is actually CapEx. So we're quite a CapEx light business. One of the interesting things about it, it actually allows us to get probably sooner to our stated end goal,
Mm.
which is, and I work for the president of our company, and he says it all the time, and really ingrains it. It's a services-led, software-enabled business. So that's what we're trying to be for our customers. We probably won't own every bit of software, even though we do have capabilities, but we're going to leverage the software we have and others and make sure that these offerings provide a strong customer experience.
One of the things that you mentioned in your initial answer was that Xerox is looking to reposition. Can you tell us a little bit more about what that evolution looks like over the next few years?
It's really in 2 stages, actually. It's about refocusing the company, making sure we're more efficient, making sure we're doing things better, making sure we're easier to work with and within Xerox. And a lot of that will allow us to be more agile, to be faster. And then with that, I think we could be more on the offense as well. But we could certainly be more on the offense instead of doing maybe some of the divestitures and some of the quote unquote cleanup work. It's really being aggressive and expanding into these potentially growing TAM. My team, we're doing an iterative strategic long range plan that's comprised of building out competitive intelligence, market intelligence, field intelligence. And by understanding the market and customers, it'll allow us to make those educated organic and inorganic investments. Certainly looking to build upon a strategy to build upon the core business, certainly focused on taking those most profitable areas and reinvesting. But a lot of the work we're doing now, to go back to your question, is about funding the journey, really making sure that we're able to do what we want to do. We realize that a leaner, more efficient organization still does not get us there. So then it's about how do we want to get there? How do we want to get to point A and B? And that's really where the business team comes in. We're going to need to empower them and to allow them, encourage them to ultimately join the journey.
That's a great segue. My next question was, I was curious to know how M&A fits into that strategic pivot that you're describing.
That's a good question. I'm not sure it's necessarily a strategic pivot. I think of it as more of a refocusing. It's really, we've talked about some of these verticals, but it's actually now how are we going to get there? And that's where the strategy piece comes in. But on the divestiture side, we've divested non-core assets. Last year, we contributed Park or Palo Alto Research Center to SRI. We sold Xerox Research Center of Canada. It's a materials facility to a company in Canada, Myant. And then we sold our 3D printing business, LMX, to a company called Aditech. So all of these good assets and Park, we could do a whole session on Park, what it's been responsible for. Obviously, the great inventions of our time, the mouse, Ethernet, graphical user interface. But where we are today, for the most part, these assets are not core to being a workplace oriented business. And they frankly consumed capital that, when we evaluated, would be better deployed for other areas that we thought were more natural extensions. Some of the work we're doing with geosimplification and some of the markets we're exiting. On the acquisition side, the strategy will inform us not only the attractive TAMs and the sub TAMs, but if we think we could win in these markets. And that's, again, a big thing. Can we win? What's our competitive advantage? Fortunately, we do have some of them. We are blessed with an incredibly talented, talented, skilled, credentialized workforce. We have that strong brand. We have a leading product offering within our segments. But the question really is then, how do we go beyond that?
And one of the things that we talked about when we first discussed this episode was really focusing on divestments, because I know that's a really big part of what you're doing in this refocusing and in this reinvention effort. And so I was curious how much of the work is really around divestments where the business unit is either not aligned anymore or that it's not strong enough. Maybe it's that geos don't fit. And again, I recognize there's a lot of complexity, and a lot of this is probably still live or in process. So, to the extent you're comfortable discussing it.
Yeah, no, certainly at a high level, we've evaluated the business and we're trying to figure out where we should be focused. At least on the geographical side, it's more about optimization of the existing markets that we serve. It's not necessarily about divesting geos that are too small or not succeeding. Certainly, obviously, a lot of those geos tend to be in smaller markets, but in many cases, they're actually profitable.
Mhm.
It's about taking a more selective approach to direct operations in certain markets. It's allowing for more flexibility and efficiency. And what that means is Xerox could re-architect its infrastructure. It's allowing it to re-architect the infrastructure to focus on less markets. And in those markets we focus on, we could then really tackle those growth opportunities we see in front of us.
Are there any
And then really from the offering side, again, it's making sure that those offerings are really not too far away of what we see as our core strengths. We might want to make sure that these are natural extensions. When I talked about some of the different areas you want to move into, these are very large TAMs that are growing. We have a lot of the capability, the intellectual capital. They're not moonshots. And I think in some other areas, not to say that they're not great businesses with great IP, but they're completely different of a sales force. They're a completely different knowledge force. They're two separate things, and we're really trying to become a much more integrated organization.
And are divestments more challenging then versus an acquisition? And if so, what are some of the challenges that you're working through as you're thinking about that?
Oh, absolutely. It depends. Obviously, if you're just selling your own business, it's a little simpler because you have an entity or a couple entities, but it's much simpler. When you have an organization that has been part of Xerox for a long time, things are quite intertwined. So it's not just, even if there is our own entity, there's plenty of shared services, integrated systems, accounting, tax. The TSAs for these things tend to be quite elaborate, and there's a lot of strategic planning. We'll think about it well before we start with the buyer, and ultimately, who are the subject matter experts that need to be included, when to include them, at what stage in the process, what part of the documentation they need to opine on, and so forth. The most challenging, though, is not necessarily those types of issues. It's really actually the employees. It's more of a softer thing that people don't think about, because in an organization like this, you have employees that have been around for a very long time, that have been part of the Xerox family for many decades. First off, we want to do right by them. Our goal is to make sure as many of them as possible find not only a home, but a good home. So for the Latin American transactions we sold our operations in Argentina, Chile, Peru, and Ecuador. What was really great about it, not only the fact that we found great partners, but virtually every employee kept their job, their benefits, their pay, their time of service. Many of these employees, as I mentioned, have been here for decades. And how do you tell them they're going to be part of another company? We knew the sensitivities. We spent a ton of time on the comms plan to reassure them that this would be good for them and for their career. And then there's the touchiest part might have been the employees we had to bring under NDA before the transaction closed,
Mm.
because obviously we needed the support for the due diligence process for the buyers, and which now we're referring to as partners because that's what they are. We haven't fully left these markets, but how do you get them motivated to drive forward the transaction where in some cases maybe they feel this is against their best interests?
Mm.
We had to take many different approaches, and that could be considering bonuses, making sure they know there's an open door policy, discussing potential career opportunities to the buyer, and really mainly establishing the trust. So certainly there is a ton of prep work, but the thoughts and opinions of the employees and making sure that they feel that we're doing right by them.
So switching gears just a little bit, we talked about divestments. I'm also curious to know, how are partnerships factored into your thinking in this refocusing effort?
Yes, I'll start with the divestments and then I'll move to just how we think about future partnerships as
Sure.
well. We thought the partner model and the way we're doing with the divestments, it's really a partnership model, the way we think about it,
Mm.
because ultimately we're still going to have an export model. We're still going to have a relationship with that partner. In fact, some of these partners, we've had relationships for decades upon decades. But we think of it as a win for customer employees and Xerox. For customers, it allows for a more focused, often in-country entity to take over all aspects of the relationship. For employees, in many cases, it provides them the ability to expand their roles and build their career. And for us, greater flexibility. With the transactions that we did in Turkey, we transitioned operations to an ASP, an authorized service provider. Peru and Ecuador to PBS, which is a longstanding partner in LATAM. They are a partner in 16 countries. So we know and trust these companies. And then one thing that was exciting about our Argentina and Chile transactions is the business shifted over to a company called Grupo Datco. It's a Argentinian base, but it's really throughout South America, T-service and fiber infrastructure provider. Completely different business, but they saw natural adjacencies to allow them to generate new customer relationships. They saw we had this strong customer base. They could sell their offerings into ours and vice versa. It gave us exposure to their customers we never had before. Yeah, I would actually just encourage you to go to the website of Grupo Daco and you can actually see how their CEO in press reports discusses the wonderful opportunities between the companies. Now, we think about partnerships on a go forward for businesses. It's very often a build versus buy versus partner. And that's something we're doing in the strategy work. It's certainly we know we probably can't win everywhere. When we talk about capture content services and digital services, I think we realize that the Googles, Microsofts, Amazon, ServiceNows of the world, they have a war chest and there's probably going to be tough to compete. But it's what are areas we could differentiate ourselves and what are areas that we could take their capabilities, partner with them, and build our services on top of it. And it goes back to the services led software enabled business. So that's something we're evaluating and we're trying to make sure we have that extra value add for our customers, that they stay with us, we retain them better, and we can potentially generate new business beyond print.
I'm also curious, do you have any advice based on what you've seen so far that you might share with other CEOs or senior executives who might be thinking about or going through something similar in terms of refocusing a company, an established company?
I spent several years as an investor on the buy side, so I could certainly give you my rules of thumb that I would probably focus on. But one of them would be try to ignore the short term, don't chase quarters. I think sometimes companies get very short term oriented at the expense of the long term. And it's easy to do because you don't want your stock to get hit on earnings and you want to make sure that you hit your annual numbers. And obviously, there's compensation tied to it. But as long as data supports it, you should stick to your plan. Don't lose focus. Don't make rash decisions. I'd say another thing is fight your confirmation biases. I think everyone has confirmation biases. We think something's right, but always challenge your thinking, play devil's advocate. I think sometimes when I take a step back and say, is what I'm really doing the right way? Sometimes I change my answer. Also, getting different perspectives allows you to change your answer as well. That goes to listening to your employees. So that maybe be a CEO bit of advice, but actually, I guess any group leader. But the employees know what's going on in the business. They know what the customers are saying, and they'll provide that info and feedback that will ultimately allow you to prudently deploy capital.
Yeah, super, super helpful. And I'm nodding aggressively because I really agree with you about the short-termism phenomena. I think that it's a real challenge for organizations. So I appreciate that call out.
There is a lot of pressure from shareholders, especially in the world we live in now, where if the results are not immediate, there's not patience. And it goes back to probably the second or third question that you asked about being a private and public company. As a public company, you're probably going to be more prone to thinking about the short term because that's what you're judged on. You're judged every
Sure.
single day.
And yet, if you really want to go through a big transformation, it's going to take time and it takes that longer term agenda.
It is, and that's
Yeah.
why I'm focused on the long-term targets and getting from point A to point B and making sure I filter out the noise.
The last question that we love to ask is I'm always curious to know you've had a chance to work with some really fantastic teams and companies in your career. What do you think that high performance companies do differently from average performers?
I would say there's two things. The ones I would lean towards is culture and vision. Those are probably the two things. I'm My role is an M&A and strategy role, but there's the adage, you might have heard it before, culture eats strategy for breakfast. A good
Yep.
strategy is ultimately challenging to execute if you don't have a good culture. So you could plan all you want, but you need that culture to execute it. And it's about establishing one where employees feel heard and one which allows for continuous improvement. Really, it's as simple as that. It's people want to feel heard. If they feel heard, when they feel like they're a part of it, and I mentioned earlier in the conversation, joining the journey, if they feel like they're a part of that, then it will lead to better outcomes as a whole. It allows a company to have a North Star that they can always follow. And without one, I think it's easy to become directionless. If you know where you're trying to get to, it certainly leads to better outcomes. So I would say those are, at least for companies that tend to succeed, that are high performance companies, they do that
I
well.
think that's a great answer. And one of the reasons I love this question is everyone has a different answer and they've all been really interesting. So thank you so much, Greg, for joining us. Thanks for joining us here at Good Revenue. If you liked what you heard, please leave us a review, follow the show, or share it with a friend. We're a news show, so it really helps other listeners find us. And if you have feedback, comments, or suggestions for episodes or guests, please reach out to us. You can find our information in the show notes.